Hello, I am Alex from Paramour Forex Trader Team. I want to talk about what you need to know on Friday, February 16th. Weak U.S. data hurt the dollar and boosted risk appetite. Extra losses in the greenback prompted another pullback in the USD index, underpinning the appetite for the risk-linked universe amidst renewed speculation of interest rate cuts by the Fed. The USD index came under extra downside pressure after U.S. retail sales contracted more than estimated in January, lending some support to the view of a potential rate cut in May. At the end of the week, the U.S. housing sector and inflation data will take center stage with the releases of producer prices, housing starts, and building permits, all ahead of the advanced Michigan consumer sentiment gauge. In addition, the Fed's bar and daily are also due to speak. Euro to US dollar extended its bounce off yearly lows and approached the key 1.0800 barrier once again, all amidst a favorable risk-on environment. Absent data releases on February 16th, the speech by the ECB Schnabel should keep investors entertained. Pound sterling to US dollar resumed the uptrend and managed to leave behind the key 200-day SMA, 1.2562, and revisit the 1.2600 neighborhood. Across the channel, retail sales will be the sole data release prior to the speech by Bose Pill. US dollar to Japanese yen added to the previous session's decline and receded to the mid-149.00s, where some initial contention seems to have turned up. The Japanese docket includes the weekly foreign bond investment figures and the tertiary industry index on February 16th. Australian dollar to US dollar remained on track to recover the ground lost after Tuesday's deep sell-off and advanced further north of 0.6500 the figure, as market participants quickly left behind discouraging prints from the domestic job report. Prices of WTI regained the smile on the back of the weaker dollar, persistent geopolitical effervescence, and the Fed's rate cut expectations. Both gold and silver prices edged higher on the back of declining U.S. yields, another negative session of the greenback as well as the broad-based upbeat tone in the commodity universe. Euro to US dollar recovers ground, extends rebound from 1.0700 after U.S. retail sales disappoint. U.S. retail sales missed the mark on Thursday, driving down the US dollar. The euro caught a leg up, putting more distance above the 1.0700 handle. Friday wraps up the trading week with U.S. PPI figures, Michigan Sentiment Survey. Euro to US dollar gained ground on Thursday, extending a rebound from the 1.0700 handle after the pair flubbed technical levels earlier in the week. The European Commission revised down its economic growth forecasts, and U.S. retail sales showed an unexpected contraction in consumer spending activity. Daily Digest market movers, Euro to US dollar pairs recent losses as investors pivot on US dollar. U.S. retail sales shrank 0.8% MOM in January, well below the minus 0.1% forecast compared to the previous month's 0.4%, revised down from 0.6%. U.S. core retail sales, excluding automobiles, also declined 0.6% in January, reversing the forecast 0.2% uptick compared to December's 0.6%, revised 0.8%. Investors hungry for rate cuts from the Federal Reserve, Fed, dogpiled on the U.S. data miss, as a softening U.S. economic landscape increases odds of a Fed rate trim. U.S. initial jobless claims came in below expectations, printing at 212K for the week ended February 9th versus the forecast 220K. The previous week's initial jobless claims also saw a revision to 220K from 218K. The European Commission lowered economic growth projections for the euro area and the broader European economy. The European Commission expected pan-EU growth to hit 0.9% through 2024, with annual growth for the euro area to see only 0.8%. Economic growth is expected to tick back up in 2025, with the EU expected to see 1.7% growth with the euro area trailing with 1.5% overall growth. Pan-EU HICP inflation is forecast to settle to 3% in 2024 and 2.5% in 2025, down from 2023's 6.3%. Friday's U.S. Core Producer Price Index, PPI, is forecast to tick down to 1.6% from 1.8% for the year ended in January. The Michigan Consumer Sentiment Index is expected to improve slightly to 80.0 from 79.0. Technical analysis: Euro to US dollar finds chart ground above 1.0755. Euro to US dollar rose on Thursday, extending a recovery from the midweek's decline into the 1.0700 handle, paring back recent losses and scrambling back over the 200-hour simple moving average (SMA) at 1.0755. The pair briefly tested 1.0785, and the euro to US dollar remains bid into near-term bullish territory but remains down from the last swing high into 1.0800. Despite an intraday recovery, the euro to US dollar is still on the bearish side of the 200-day SMA near 1.0830, and the pair is still down 3.3% from December's peak bids at 1.1140. Pound sterling to US dollar gains on weak US retail data, despite UK recession fears. Pound sterling to US dollar recovers from daily lows, trading up 0.17% after a soft US retail sales report. UK officially enters recession, with GDP shrinking in the final quarter of 2023. BOE governors signal potential for higher interest rates, depending on economic indicators. The pound sterling climbed during the North American session following a soft retail sales report that lifted the major from a crucial technical level. Consequently, the greenback is on the defensive as the pound sterling to US dollar trades at 1.2586, up 0.17%, after jumping off a daily low of 1.2541. Pound sterling edges high amid mixed US economic reports, BOE's rate cut estimates. Data from the United States, U.S., was mixed as retail sales in January plunged minus 0.8% MOM, below December's and estimates of minus 0.1% due to a drop in sales at auto dealerships and gasoline service stations. In addition to that, stormy weather also weighed down affected sales. At the same time, unemployment claims for the week ending in February 10th rose by 212K, less than forecasts and the prior's reading of 220K. Claims were expected to bounce back after companies announced layoffs. Earlier, the pound sterling to US dollar dropped to a daily low of 1.2541 as the Office of National Statistics, ONS, in the UK reported that the economy fell into a recession at the end of 2023. The gross domestic product, GDP, shrank minus 0.3% in the 3 months to December, which confirmed the country entered a recession in the second half of 2023. Recently, the Bank of England, BOE, Governors Megan Greene and Catherine Mann crossed the wires. Greene, one of the hawks of the BOE, said she thinks rates are going to be higher than before and would consider changing my view if measures of wage growth ease. Mann commented that she's not surprised by weak growth in 2023, that the outlook for 2024 could be brighter, and that she would look toward business surveys like the Purchasing Managers' Index, PMI. Fed and BOE interest rate expectations. According to the FedWatch tool, the Fed is expected to cut rates in June, with odds at 51%, but some traders estimate the Fed would slash rates by 50 bps. Meanwhile, the Bank of England, BOE, is seen cutting rates by 25 basis points in the August meeting. Pound sterling to US dollar price analysis, technical outlook. The daily chart shows the pound sterling to US dollar is neutral to downward biased, hovering around the 200-day moving DMA at 1.2562. Buyers will need a decisive break above 1.2600 if they want to remain hopeful of shooting the pair upwards, with eyes at the 50 DMA at 1.2669. On the other hand, a daily close below the 200 DMA could pave the way for further downside. If you like such analyses, please subscribe us. Thanks and bye.